Welcome to our video on different types of financial market trading strategies. In this video, we'll explore the pros and cons of swing trading, day trading, and long-term investing. Then we'll discuss how they apply to both the stock market and the crypto market before summarizing the general approach of each, so make sure you stick around till the end. Strategy 1. Swing trading. Swing trading is a strategy that involves holding positions for a few days to a few weeks with the goal of capitalizing on short-term price movements. This strategy is particularly useful for those who want to avoid the stress of day trading and have a more flexible schedule. The advantages of swing trading include lower stress levels as well as the ability to profit from both bullish and bearish market conditions. On the downside, swing traders may miss out on long-term gains and market volatility can lead to higher risk. Effective swing traders typically try to identify an asset that they know particularly well. Once they identify this asset, they'll try to identify a range that the asset generally trades within. For example, they might see that this particular asset trades within the range of $1 to $1.50. The general idea would be to buy when the price is toward the bottom of this range and sell when it gets toward the top of this range. Strategy 2. Day trading. Day trading is a strategy that involves opening and closing positions within the same trading day. This strategy requires a lot of focus and attention to the markets, making it ideal for those who are able to devote full-time attention to trading. The advantages of day trading include the potential for high returns and the ability to take advantage of market volatility. However, day trading can be incredibly stressful, and the high frequency of trades can lead to higher transaction costs. Understanding both the technicals and the fundamentals of trading is important here. There are various factors that weigh into whether an asset's price will increase or decrease at any given moment, so this strategy is particularly difficult for beginners. However, if you're willing to dedicate the time to learning this properly, it can be a very lucrative strategy. Strategy 3. Long-term investing. Long-term investing is a strategy that involves holding positions for several months to several years with the goal of achieving long-term gains. This strategy is ideal for those who are looking to build wealth over time and are willing to be patient with their investments. The advantages of long-term investing include lower stress levels, the ability to benefit from compound interests, and the potential for higher returns over the long run. However, long-term investors may miss out on short-term gains and may need to weather market downturns. Most people with retirement accounts are long-term investors whether they realize it or not. Generally speaking, it's been proven that long-term investments rarely lose when the investment itself is sound. In other words, when the investment is put into an asset that will be around for a long time. This is considered the safest way to take advantage of asset appreciation, applying these strategies to the stock market. Now let's explore how these different strategies apply to the stock market. The stock market is a highly liquid market that offers a wide range of investment opportunities. Swing trading is an effective strategy for the stock market that allows traders to capture short-term price movements in individual stocks. Day trading is also popular in the stock market as there is a wide range of stocks available for trading, and the high liquidity allows for quick execution of trades. Long-term investing is also a popular strategy in the stock market, as stocks can offer a high potential for long-term growth. The bottom line for deciding which strategy is best for you is that you must understand your own risk tolerance, your market knowledge, and execute your strategy according to the plan you set to accomplish your individual goals. Applying strategies to the crypto market. The crypto market is a relatively new and volatile market that offers high potential for returns but also carries a high degree of risk. Let's explore how these different strategies apply to the crypto market. Swing trading is an effective strategy in the crypto market as the high volatility of cryptocurrencies can lead to significant price movements in a short period of time. Day trading is also popular in the crypto market as the market is open 24/7 and provides opportunities for quick trades with relatively consistent fees. Long-term investing is less popular in the crypto market as the high volatility and uncertainty of the market make it difficult to predict long-term growth. While investing in crypto is considered to carry higher risk, it can also offer opportunities for greater returns. If you're interested in learning about different cryptocurrencies, you can check out our other channel, Crypto Talk, to learn more. Pros and cons summary. To summarize, each trading strategy has its own pros and cons, and the best strategy for you depends on your personal financial goals and risk tolerance. Swing trading is great for those who want to capture short-term price movements while avoiding the stress of day trading. Day trading can offer high returns, but it also comes with higher stress levels and transaction costs. Long-term investing is ideal for those who are looking to build wealth over time and are willing to be patient with their investments, but it requires a long-term commitment and may require weathering market downturns. When applying these strategies to the stock market, swing trading, day trading, and long-term investing all have their advantages and are popular among traders and investors. However, the crypto market is more volatile and less predictable, making swing trading and day trading more popular strategies. Long-term investing in the crypto market is less common due to the high uncertainty and risk. Before deciding on a trading strategy, it's important to consider your personal financial goals, risk tolerance, and available time for trading. You should also conduct thorough research and analysis to make informed trading decisions and mitigate risk. We hope this video has been helpful in understanding the pros and cons of different types of financial market trading strategies and how they apply to both the stock market and the crypto market. Remember to always trade responsibly and make informed decisions based on your personal financial goals and risk tolerance. Thank you for taking the time to watch. If you've enjoyed this video, don't forget to smash the like button and subscribe to be the first to get future videos on how to make money online.